Hello investors. Kotak Tax Saver Fund, an open-ended equity-linked savings scheme with a statutory lock-in of 3 years, gives you the benefit of equity participation plus the taxation benefits under Section 80C of the Income Tax Act. The fund endeavors to generate long-term capital appreciation from a diversified basket of equity and equity-related securities. We follow the investment style of growth at reasonable price, also known as GARP. So the fund will likely have a diversified portfolio with a tilt towards growth stocks that are available at reasonable valuations. The fund emphasizes on bottom-up stock selection with a top-down thematic overlay to help identify stock opportunities. We are fundamentally driven. We tend to pick stocks which have proven business models that are scalable and capital efficient. We focus on management quality and their alignment with minority interests. Above all, we are always conscious of stock valuations. In a nutshell, we aim for businesses that have compounding characteristics and are available at reasonable valuations. Kotak Tax Saver is market capitalization agnostic in investment approach and can invest across large, mid and small cap segments depending upon attractiveness of the stocks basis the analysis. What has worked for the fund in the past is the disciplined approach that we follow despite the ups and downs in the market. As far as the current portfolio positioning is concerned, we have got a healthy mix of large, mid and small cap stocks in the portfolio. Currently, large, mid, small cap exposures in the portfolio are around 63, 23 and 10% respectively. The current investment focus is on cyclicals and early cycle beneficiaries. The top overweight sectors are chemicals and industrials. The top underweight exposures are in oil and gas and financials. Recently, we have increased the exposure to the auto sector as the capacity constraints and commodity cost pressures are likely to ease going forward. Indian equity market has witnessed higher choppiness in recent times, driven by rate hike actions and growth concerns across the globe. Once the inflation pressures cool off, we expect economy to gain momentum and earnings growth to remain strong. We believe Kotak Tax Saver Fund is well positioned to capture potential upsides from the equity market in the medium to long run. We would also like to add that investors generally shouldn't wait till the end of the financial year to get the tax benefits. Many people seem to believe that income minus expenses is savings. Our recommendation is let income minus savings to become expenses. Tax savings or savings shouldn't be left at the end of the year. Instead, we would suggest starting a SIP in an equity-linked savings scheme from the beginning of the year rather than wait all the way till the end. Happy investing. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.